China is launching its first state-backed non-fungible token, or NFT, marketplace. This is the latest sign that the country is warming up to a technology that has been in a legal gray area because of the country's strict rules on cryptocurrencies. This also makes China the first ever country to create its own blockchain ecosystem. Nothing less is to be expected of one of the world's most technologically advanced countries. For those of you who don't know, non-fungible tokens, NFTs, are digital assets that are unique and can't be traded one-for-one for other tokens or assets. They are often used to stand for things like art, music, videos, and other creative content. NFTs can be bought, sold, and owned just like physical assets, but they exist on a digital platform, usually a blockchain. Because they are one of a kind and checked on a blockchain, NFTs can be a way for creators to sell digital content in a way that makes sure the content is real and that the creator owns it. Chinese traders have been buying and selling NFTs for most of the last 2 years, but not in the same ways as traders in other countries. In China, NFTs can't be bought with cryptocurrency, and they're not even called NFTs. Instead, they're called digital collectibles. Digital art is also traded on closed platforms that are heavily regulated as opposed to open ones. China's restrictions on the resale of NFTs known locally as digital collectibles are expected to be eased in the future, some experts are saying. China is making a digital asset trading platform to make it easier to buy and sell intellectual property and non-fungible tokens, NFTs. In China, where cryptocurrencies are illegal, NFTs are called digital collectibles. China has reportedly made its own blockchain ecosystem, called the Blockchain Service Network (BSN), which will be used to deploy NFTs. But it looks like the BSN won't be used by the China digital asset trading platform. It will instead use its own blockchain called the China Cultural Protection Chain for tradable digital assets. This blockchain will provide digital asset registration, confirmation of rights, deposit certificates, rights protection monitoring, and copyright protection services for institutions and individual users. Beijing has stepped up its efforts to grow China's digital economy by applying business rules to data, and this move shows that. China Daily, which is run by the government, says that the launch ceremony took place on January 1. The platform was made by China Technology Exchange, which is a government-backed group that helps people trade technology, Art Exhibitions China, which is a government agency, and Huoban Digital Copyrights, which makes blockchain technology. The platform, which is built on the China Cultural Protection Chain, is made to register, verify, deposit, track, and protect digital assets. According to Liu Jiahui, a partner at the intellectual property law firm De Roon Lawyers in Beijing, the move is important and valuable because the platform can provide a good way to trade copyright and digital products in the future. Everyone will come to the platform, which is like an aggregator for trading and searching for information, Liu said. The news came after the Central Committee of the Chinese Communist Party and the State Council released new policy guidelines. These guidelines were meant to boost the data market and deal with issues like data rights and the distribution of trading profits. As Beijing moves to protect what it considers to be sensitive information, Chinese authorities will do a strict review of data processing, cross-border data transfers, and mergers and acquisitions (M&A) activities that use foreign capital and could affect national security. It shows how Beijing has stepped up its efforts to grow China's digital economy by putting business rules on data, which the central government sees as a new production factor on par with land, capital, and human labor. Under the new rules, putting a national security review in place for certain deals helps Beijing build an orderly way for data to flow across borders. Taking part in making international rules and technical standards in areas like digital currency is another thing that the guidelines cover. Even though Beijing has a strict ban on trading and mining cryptocurrencies, digital collectibles are allowed as long as they don't involve Bitcoin or Ether. Last month, the Chinese court said that digital collectibles should be considered virtual property and should be protected by laws about e-commerce. To make them different from NFTs, digital collectibles in China are bought and sold with real money and can't be sold again for a profit. Such restrictions have cooled enthusiasm in the local market. A year after it started, tech giant Tencent Holdings shut down its Huan platform for digital collectibles in August. Liu thinks that it will be easier to resell digital collectibles in the future. As virtual property, digital collectibles should be entitled to transactions. I don't think the restrictions will last forever, she said. With all of this being said, now we wonder, what lies ahead for the future of China's crypto economy? How advanced will their system become after a few years? These we will eventually find out. Thank you so much for watching. If you enjoyed the video, please consider giving us a like and subscribe to the channel to be notified with more interesting content about crypto and finance. Stay savvy.